Hey folks, it's Rick. Time for your August 2023 Austin market update. I'm going to have a little nugget of wisdom for you right at the end, but let's just jump right on in. All right, average sale price. Average sale price went down just a skosh over last month, but that is right in line with what we see seasonally. So we're kind of heading into the little bit of a softer late summer and early fall market. Totally normal. As you can see, prices have really stabilized, so we are not in the decline that we were in last year, so things are looking good. Number of home sales. Home sales are starting to stabilize, ticking up just a little bit. Still plenty of inventory. We'll roll that into that here in the next slide. You can see the total number of listings. We're still at a 5-year high for the total number of listings. Plenty of things to choose from, but you can see if you look at like 2020, we kind of hit the COVID market, and you see how that inventory slid down really fast. And then, of course, last year you can take a look at how the inventory jumped up really fast over the couple of month period. So the thing to keep in mind there is when interest rates come down, or when folks get really comfortable with interest rates and buyers jump back in with a little bit more confidence, they're going to gobble up our inventory pretty quick. Speaking of those good old mortgage rates, let's talk about that. So here we are, mortgage rates. So 7.55 as of today. So we are really at a 52-week high. So here's kind of what we're looking at with mortgage rates right now. The Fed met last week, did not raise rates. They have 2 more meetings this year, November and December. All indications are that they're going to raise rates one more time, and that still makes the bond market a little bit nervous. So I think we're really going to see interest rates kind of stay in that 7.5-ish range, plus or minus a little bit, for the remainder of the year. Once the Fed decides to stop raising interest rates, which will probably be Q1 of next year, I think you'll see some stability starting to happen in the market. But I really don't think we're going to see interest rates move down a whole lot or anything that would be significant, probably for somewhere between 6 and 12 months. So the Fed's going to want a couple of months of some very good numbers so they don't get nervous. When they feel inflation's under control, that's when the Fed may start lowering rates a little bit. When the Fed starts to drop rates a little bit, that's where we're going to see the bond market really react positively to that, and we should really start to see mortgage rates come down a little bit. I would just keep in mind, too, that mortgage rates will probably not get down into the 3 and 4% where they were before. We can certainly be hopeful that they'll get down in the 5s within the next 12 to 18 months, but still may not happen. So if you're interested in buying a house, something to keep in mind is mortgage rates and house prices, there we go, and interest rates have kind of a little bit of an inverse attraction with each other. When mortgage rates are low, home prices go up. When mortgage rates are high, home prices go down a little bit. So kind of something to think about there is mortgage rates are high, home prices are going to be a little bit lower, because as soon as people step back in the market, supply and demand is going to take over and prices are going to go back up a little bit. So I would keep that in mind. So if you're really interested in buying, you need to take might hurt a little bit, but now might be a good time. Early next year might be a good time to pull the trigger on that. Rates come down, you can always refinance. I will see you in the next mortgage update.